All right, good morning, everybody. Welcome to Forex.Today. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Nice to see you. Welcome to my office. Man, this camera setup was, I don't know, it just seems closer than it normally. Maybe, what? No, that's just how it is. All right. Just see if I can get this to fit a little better. No, that's just going to be how it is. So anyways, good morning, everybody. Oh, good. I blew Jeff's speakers. Good. Not sure why. So anyways, good morning, everybody. My name is Wayne McDonald. I am a currency trader. I like technical analysis. I like fundamental analysis. So we'll cover those today with the overriding goal of helping you put together trade plans. So ask questions, get involved. Let me know how I can help. I'll do my best to cover what you want me to cover, but typically we go through the dollar pairs, the yen pairs, gold, oil, Bitcoin, that kind of thing. But if you want me to cover cross pairs or something, yeah, I could look into that. Also, we can do things like relative strength exercises. We could do scalping, spot, swing, position, carry trading, all these different things. They're all up for grabs. And these webinars, if they're helpful, that's great. In particular, that there's no monetary cost, but there is a cost. The cost associated with these webinars is that you must visit tradersway.com and open up a demo account. That is the cost. Now, what they're asking for by sponsoring our community, they're asking for an opportunity to earn your loyalty and respect. That's all they're asking for, is an opportunity to earn your loyalty and respect. And typically you get that because of the fast execution speed, low spreads, big swaps, world-class customer service. Man, got to get out of this COVID cut. Got to get out of the COVID cut. Man, it looks just terrible. So anyways, thank you very much, Traders Way. Thank you very much for everybody here. Thank you for being part of the Forex.Today YouTube community. Okay. No, I don't. Okay. Cool. So what do we have here? Pray tell, what do we have here? Why don't you? I don't know. Why don't I? No particular reason why I don't. Oh, right on, Jean-Guy. Okay, so here we are. This is what you were supposed to do yesterday. So once again, I'm kind of getting in your face. I don't know how you feel about that. But if you said you were going to do it or thought you were going to do it but didn't do it, you need to make a change. Excellent, Maida. Excellent. So this is a little more detail, okay? But you get opening remarks, right? And then you get the discussions. So you get chair, vice chair, Governor Clarida, and then we get the discussions. Okay? The discussions. The staff review of the economic situation, interesting. So they talk about COVID, they talk about PCE, okay? They talk about real estate, business investment. See, a lot of this goes into GDP, obviously. Import exports, foreign economic activity, staff review of the financial situation, yields, expected path of Fed funds rate, stock market, okay, just on and on, credit, financing conditions, staff economic outlook. This is where they're predicting the future now. Staff's medium-term projection is blah, 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 blah. The staff continue to observe blah, 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 blah. Participants observe the incoming data, blah, 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 blah. This is all stuff you should know. I mean, here's what I think is going on. They give you the answers. Okay? They give you the answers. They're telling you, based on all the PhDs and all the science and all the math, what their best guess for the near future is, what the policy is likely to be, and you should know what that impact on the US dollar is likely to be because of that. They're telling you what the value of the dollar is going to be. In their consideration of monetary policy at this meeting, blah, blah, blah. So you just have to read it. Against this backdrop, participants discussed a range of issues. A couple of participants. Okay. This is where you're starting to get some disagreement on the policy, and they're discussing it. Because remember, we do not have a unanimous board anymore. Okay. A couple of participants preferred even stronger, less qualified, outcome-based forward guidance. Policy action. All members agreed to maintain. Okay. Okay. I mean, so there's more information here. It's not a lot, but it's more than one page. But, I mean, they even bullet pointed for you. I mean, come on, right? Okay. I'll even give you the link. You're welcome. Okay. No, it wasn't hard to find. It's on the homepage. Right, Johnny? Oh, what? So anyways, guys, do the work. Come on. Come on. Put your big girl panties on and do the work. Okay. All right. How about this? This is on page 3. Like, you can do the overview. I guess I've jumped into the analysis part. What I want to show you is one of the things that we're looking at as a group. And oh yeah, by the way, today is Thursday, so our swing trading group are getting together to talk technicals and fundamentals today at 4 p.m. So if you're part of my live swing trading weekly group, I'll see you there. If you want to join, it's fxbootcamp.com. Sign up for the video training courses, and you'll be invited to also upgrade your account to join the live. All right, so one of the things, the reason I said that, what popped in my mind is we covered this actually about a month ago in that group. That's why it popped in my mind. So one of the things we've been doing in that group is paying attention to this data here. Okay. And the closer the blue line gets to the gray area, the more likely oil is going to go up. And the other thing you can watch here is this is how many days of oil we have. You can see we have way too much oil here, and this should be coming down. Okay, we should be at 25. We're at like 35. We're higher than 35. Okay. 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 You can see production was greater than usual, and now it's way below. We saw this, we covered this yesterday. We saw that the rig count was down, which would obviously deter production, but check this out. The last couple of weeks, it's popped back up. Okay, and imports are down. Okay, production's down, imports are down. And when you go to the overview, it's pretty nice. They gave you some crack spreads and stuff. Global crack spreads. Cool. Interesting, because that wasn't where I was. I clicked back and it gave me, anyways, whatever. So you can also take a look at that. EIA, IEA, OPEC. They're all very good websites, by the way. The CFTC, you mean the Commitment to Traders report? Just go to Forex.Today. It's there anytime you need it. Just want to show you, after you do, okay, very good information here. So anytime you do the EIA and IEA reports, you should probably check out OPEC. Okay, lots of good information here. Huh? How pretty is that? Okay. You can see OPEC's producing more oil again. So here's their OPEC versus WTI. Isn't this cool? Yeah! Anyways. So anyways, lots of good information out there. Yeah, that's true. If you go to the CFTC website and download the Commitment to Traders report. By the way, that's how I used to do it. It's very complicated. Yeah. Right. It's very complicated. Where is it? And you download it, and it's a spreadsheet. Okay, there it is. So you could use this, or you could use this. Okay. What do you think of that? Cool. Mahir says, does OPEC deal with both Brent and WTI? No, but the information about WTI is publicly available. Okay. All right. So today, Australia, the Australian dollar's up, yen is down, dollar's down, Swissie's down. Bum bum. Hey, that's good. That's good. Look at my hair. Help! I need hair help. I need hair help. So that's good. We've got some risk on. Kitty cat up, that's some good risk on. Aussie up, that's some good risk on. Kiwi moderately up, that's good. Okay. So that's really nice. Risk on, baby. Risk on. Take a look at commodities. Okay. Let's see. So this is what I guessed last week, and this is what we've done so far. Not too bad. You're welcome. Okay. And what did we talk about yesterday? I talked about this being dangerous and this being the better way in. Did you guys get that message yesterday? Right? By the dip, not the drop. Do you guys remember? This being a drop, this being a dip. Yeah, and Ash remembers? Cool. Okay, so now you're working on tomorrow's plan. Okay, today's already done. Okay, well, we were here yesterday. And I said to plan this for today. And now here we are today, and I'm saying do this for tomorrow. Today's already done. What's up, fellas? What are we doing today? Okay. Very neat, very neat, very neat. My oh my, WTI. Okay, back to the 40 handle. Okay, very cool. Okay, look at the big up, the big down. Very nice. Very, very, very cool. Bitcoin doing a lot of nothing. Still nothing, that's fine. And if you recall this trade, or not trade, but setup, Do you remember what this was all about? We did this, gee whiz, a month ago. Do you guys remember what this was about? Why did we have this planned out? Why this little arrow? And I'm just referencing it now in the sense that we're back to this, even though it didn't quite happen the way we wanted. We were watching it to indicate something else. Do you guys remember? Hey, Thomas, take your spam and leave. We're not interested. You're in the wrong place, buddy. Not demand, no. This is Brent. Hint, hint, hint. Brent crude. What were we doing this? What was this about? Huh? If you don't remember, type in a question mark. If you want me to tell you, type in a question mark. Why this? What was this a leading indicator for? Noki. Look at this. We're totally getting spammed now. So now we got two people. What an interesting thing. So now we're going to it's going to be hard to block people. How sad. Yeah, it's a bot. But I feel sad for people that are in a situation like that. Also, the person that's paying for the spam, to be in that kind of, I don't know. I like to think that we wake up in the morning and somehow we make the world a better place. And it must suck to feel like I'm going to wake up in the morning and I'm going to jump into other people's stuff and get in the way and bother people. That's what you do. That's what you do with your existence on Earth. You're like, wow, really? Oh my God. So, anyways. All right. Noki. Do you guys remember that now? Huh? We had it somewhere. Norway. We had the Norway going somewhere. I don't remember where we put it, though. Yeah, it's true, TA, but I think it's just in general. Oh, maybe here. So, there it is. Yeah, boy. There we go. That's what we did a month ago. Oh my God. Very cool. Ajang, don't delete the messages. Block the bot or whatever. You have to block. You got to block them. Let's see if I can do it. Hide user on this channel. All right, gone. All right, cool. So interesting, huh? Interesting, huh? There it is. Well, Paul, make sure you don't invest any money with them. Unless you won the Nigerian lottery again. Right on, Shangi. All right. Yeah, Jackie Brown sister. Well, there you go. Neat, right? So now maybe there's going to be some follow through, but Brent crude oil prices up. The Norwegian crown are down this way. I mean, it's still up, but up. And then, of course, Brent up would also be indicative of macroeconomics, which would, positive macroeconomic outlook, would lower the value of the USD. And then rising Brent prices would increase the value of Norway, which means this whole thing would head down, and we've already targeted that. Remember that we did this last month. This was like the 23rd of September. And you remember, it's so tight here because none of this had been drawn yet. So all we had was, so anyways, there you go. Cool. Well, so the thing is, if we're talking about Trump and a trade war, or Trump and a stimulus package, or Trump and this, and we're not talking about his competitors. Okay? You understand? Hey, Wayne, Aussie dollar's looking great. Well, yes, that's what the indices are all about. Okay. So let's put this into context. And we did it yesterday, but let's put it back. Let's do it again. Okay. We did this yesterday, but let's do it again. Okay. This is where bears sell. This is where bears exit. Okay. Notice that the bears are up. Cool. This is where, in general, for the month of October, this is the buy zone. Okay? So bears are out. Bulls would buy in here or a double bottom, but that's less ideal. Okay? All right. So let's zoom in a little bit now. I just want you to remember that this whole area is a buy zone. Now, how do you buy it? Okay, so this is where we talked yesterday about this is the drop. And I'm like, you could buy this. And if you remember, I said, oh, it is a 50%. It is a psychological level. It is something. I mean, there's lots of things you could do. But we also know this is where bears would sell. Okay? So it's sort of foolish to buy this drop. Even though you're in your zone, it's not the right thing to do. Okay? So if you're a bull now, what we said is you need to buy the higher low, the dip, but not the drop. Okay? And that's what we're looking at here. Now, we still don't know if this is going to go up by the end of the month, but if you're a buyer, you're tiptoeing up. Okay? And then, of course, this is another sell issue. Okay? And if you can tiptoe your way up and change the slope, it becomes more and more bullish off of here. And then this becomes the higher low. Sorry, the lower high. No, the higher low. The higher low, sorry. Okay? And all of this is multiple time frames. That's what we're looking at. Okay? On a multiple time frame, on the higher time frame than the 4 hour, you're trying to do this. So now on a smaller time frame, okay, you're trying to do this, which is the same as the other one, just on different time frame. Okay? So, right, if you held that now, you could hold it for the rest of the month and, you know, hit the swing target and hit the bullish exit, or get knocked out for break even. Okay. So yesterday I made a video called How to Tiptoe into Your Swing Trade or something like that. And you might want to watch that. Okay. Thank you, Emmanuel. Welcome. And as far as I'm concerned, Aussie dollar going up is the same as USD NOKI going down. USD CAD is also the same as NOKI going down. Okay. If you're a bear on this, then there's your sell price. There's your exit. For this to happen, you need WTI and Brent to go up. And there, this would come down. Once again, WTI going up and Brent going up pushes up the value of the Canadian dollar, but the macroeconomic forces behind WTI and Brent going up lower the value of the dollar, so you get that move. Okay? Now, we did look at inventory levels and OPEC production today. By the way, if you have somebody in your life that's good looking, this is how you impress them. You say, you know, I was looking at supply data from both the EIA website as well as the OPEC website, and I noticed some interesting trends. First of all, we have more supply than we need in the United States, and OPEC production month over month has actually gone up. And I thought that was interesting. And that good-looking person will look at you and instantly fall in love. It works. You know, 60% of the time, it works every time. Okay. Oh, your customer, it's on YouTube. Where is it? It's on YouTube. Let's see. Let's pull it up. Let's pull it up. YouTube.com/Forex.Today. Live now. Why does it post it twice? It's weird. How to tiptoe into a new Forex trade.
Steve and Dave use eToro to
Scalping into a swing trade.
Steve does extensive research in order.
Huh? Cool, right? I know, right? Stop it. Shh. shut the back door. Look at that. I just drew that now. What? That's nuts. That's nuts. Oh my God. If I got paid per line, huh? Isn't that pretty? That's hot. That's hot. Ba, 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 boo. That's hot. That's hot. So we'll see if there's any up left. See if she's got any more hop to her. Got to get through this faux show. Okay. Right now the 18 is holding. So 1750 might be an interesting area. Kiwi, meh. Right? What do we know about Kiwi? This is the sell zone. This, right? This is a roll reversal. So Kiwi is very weak. Okay, and not surprisingly, because they're probably going to go negative. We already know that. Okay, but anytime a bear's like, if you're a bull, you need to really back off, man. That's very bearish. Okay, so but I want the dollar to be weak, so Kiwi, whatever. Kiwi's very, very weak. I mean, wow. Okay. Right? Look at this trade plan I got for you. Hey, you're welcome. You're welcome. Isn't that nice? The basic swing is this is the buy zone for the week, and this is the exit for the week. Isn't that nice? Well, there's going to be some profit taking, okay? And if you're going to continue as a bull, that would be there. So this is the September bearish exit, okay? So bears exit, so you get the up, and then this is the bullish entry. Okay? And the month for the month, so October, okay? And the target is way up here. Way up there. Okay? So now you got to go into the weeklies, okay? So this is the weekly buy zone last week and the target. And then here's the weekly entry this week and the target. Here's the weekly entry next week and the target. So when you thread those pearls, you get the out is just as important as the in, okay? And now we got this going on. Okay? You got that? Okay. Trying to fit this in. So you can see I drew this one here. Can you see it? Oops, delete. I'll do it in yellow. Okay. So why did I draw that? Well, you got the higher high, higher low scenario. You got the bearish exit. Okay. And here's the bullish entry for the month. And here's the bullish exit. So we don't know if it's going to go there, but if you're a bull, that's what you plan for. You see the kickoff here, so you buy the dip. Okay? And from then on, you are trying to continue to buy dips. The major challenge, you're going to have two challenges that you'd be worried about in the beginning. One would be this challenge, and the other one would be that challenge. So we're kind of in that challenge zone, because on the weekly, you can see we're OOP. You probably should have taken profit on Tuesday. This is sort of a lucky second chance. I don't really care about them. So that what you want now is a bull. Remember, it's not that you're going to get it, but what you want is some sort of, drop and breach. Once you get above this 125.50 level, you're almost certainly going to go to like 128. So you don't know that here, so you certainly wouldn't buy that. This is an exit, not an entry. That's why I call it the pivot profit zone. So now you get the breakout. You know how to trade a breakout. You buy the pullback off the roll reversal off the M3. Okay? Now we have this and starting to feel all right, but we're not free and clear quite yet. But bulls have legitimate, right? A legitimate move. Okay? And notice how a lot of these new moves occur, at the end of the month. Okay? It very rarely happens in the beginning of the month. And when it does happen, then you already know about the counter trend trade in that setup. That's standard operating procedure. But I think it's very interesting that we hit the end of the month and then it's the next turn. Now, what we don't know is if it's going to head back down, but that's where your opinion on macroeconomics is important. If you understand the fundamentals, you might say, well, you believe more up than down based on fundamentals. That gives you the courage to say, I'm going to stick with this and we'll make it through. Okay? If you don't have the fundamental side, you don't really know why it's happening, so you don't see this happening. You don't see this change. And that's the problem, right? Where when you're pure technical analysis, you get these dips and everything's going great, and then you buy the next dip and then right? And you get caught sort of in here, buying and selling based on lower highs and lower lows, and you get caught in the price action, and you make some money here, and the trend worked, and then you kind of took a loss here, and then you another one here, and somewhere, because you get averaged out, and it's hard to have a direction, where fundamentally you say you have a direction, and you're like, well, you might have, let's say, bought here and broke even. You might have bought here and so you broke even on this one, but you caught this one, you caught this one, you caught this one, because you're only trading in one direction. And of course, you'd only trade in one direction because you have a fundamental bias of where this should go. Okay? Right? Even though this was down for the entire month of September, I asked you guys, do you think these yen pairs are going to be higher at the end of the year or lower? And most of you said higher. So therefore, I know you're catching these because you expected it. Even if it, right? Even if it doesn't occur, at least you're setting up trade plans to have it occur. That's the big difference, right? Bernard says, won't the U.S. election create risk off? No, I think it'll create risk on, Bernard. Okay, the risk off we had in September. Okay. One of the things we did in my swing trading group, my Thursday group, we must have done this, 6 weeks ago. But we looked at last election cycle, the night Hillary lost. But we looked at the 4 months, the August, September, October, November period. And it's very, very, very similar to what's occurred now. So this is something we did 6 weeks ago in preparation for these market conditions. How beautiful. So, yeah. And so we're not really, we don't know the future. We don't know the outcome, but we're prepared for these conditions. Okay? And we didn't, it's a little disappointing that we didn't get a stimulus package from the government. That was a possible variable when we were talking about what might happen, when we were talking in August of what might happen in September, October, November. I said, well, we don't, in the third week of August, you got to do the trade even if you don't expect it to happen. We had setups, we took trades, and I think in a week or two, we had multiple trades up hundreds of pips. And then we get to the beginning of September, and I'm like, look, I don't think this is going to work, but you have to prepare that it just might work. I said, in the fourth year of an 8 years political cycle, it tends not to work, but we got good trades, we're profitable. But I don't think it's going to work. But we might get lucky. This is how sort of open and honest these conversations are, right? I said, look, we might get lucky. The government's coming back from summer recess. Congress is coming back. And we just might get a stimulus package. And it might be as high as 1.6 trillion. And if we do, we're going to get follow through this year. Even though it typically doesn't follow through in the fourth year of an 8 year political cycle, we don't typically also, in that fourth year of an 8 year political cycle, throw down 1.6 trillion of free money. That's a pretty unique scenario. That scenario, we would get the follow through on all these trades, which we typically do this type of year. But I don't, barring that, I don't expect it to work. And of course, September came crashing down. And we didn't get the stimulus package. If we had gotten the stimulus package, all the yen pairs would have gone up. See? Cause and effect. But having looked at what happened 4 years ago during this time period, September was a down month. Okay? And October was sort of a dipsy-do kind of month. But so going back to who asked. Bernard says, won't the U.S. election create risk off? Well, where did you get that information? Right? Bernard says, won't the U.S. election create risk off? Why would you say that? If you look at what happened in the past, which is the best answer, past performance does not predict future results. I get it. But in a similar condition, what happened in the past? Some of these yen pairs, Bernard, went up 5,000 pips. That's risk on, baby. That's way risk on. Will that happen this November? I don't know. I don't know nothing about that. But what would you do, Bernard, with that knowledge? Now, I'm worried, Bernard, that you were in someone else's webinar and they're like, oh my God, if Trump wins, it's over. He's going to crash the economy into the ground. He's going to trade wars. You know, all this kind of stuff. I'm like, whoa, 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 whoa. It's people tend to get this idea of good and bad means good and bad in the currency market. And that's not really how the currencies work. For example, if things are bad enough, that's good news. If things are bad enough for the Fed to change a policy, that's good news. So you might say, oh my God, we lost 1 million jobs last month. Yeah, well, if that means the Fed's going to pump free money in or something, then that could be good news. Okay? And a lot of people say, I hate Trump, so Trump's going to ruin everything, and if Trump wins, it's all over. No, that's not actually how it works. What works is when we are certain who the President of the United States once we know who the President of the United States is, I was trying to think leader of the free world, but I can't think and talk at the same time. COVID. So when we know who the President of the United States will be for the 2021 period, right? Once we know the election, then the uncertainty is removed. Uncertainty is what creates risk off, Bernard. Okay? Uncertainty. If we knew if the market was certain who the President of the United States, like if Trump had 2% and Biden had 98%, like just everyone was for Biden and everybody knew it. And even Trump was like joking about his odds of winning. Then the market would be certain and we'd have a risk on mode because we'd know who that was. Okay? But we don't. Okay? We don't. And in fact, even if Biden wins, the problem is we don't know his cabinet. So like I said a couple of weeks ago, you don't know who Joe Biden's Secretary of the Forestry is going to be. You don't know who Joe Biden's going to put in charge of FEMA, right? You don't know who's going to be this, that, or the other thing. Okay? And so that's uncertainty. So even if Biden wins, it'll be months before we know who's actually going to run the government. And that's a whole different story. If Trump wins, we already know who's in place. And we already know who what policies are going to be in place. Okay? But there's a lot of question marks about what will Biden do first. And so part of the conversation last night during the vice president debates is, will Biden repeal Trump tax cuts? Remember, they don't call it raising taxes. They call it cutting the cuts. But like you don't know, like, when are they going to do it? Are they going to do it? If so, how much? How much will impact things? There's questions. But if Trump wins, I think the stock market's going to go up hot and fast because we already know. We already know all of that, and we don't have any uncertainty. It's not about whether you like him or not. That is irrelevant, really. What's relevant is if we go into a trade war again, that will impact global trade. But as far as the election's concerned, there is no good or bad. There's either certain or uncertain. I think if Biden wins, now we're certain of a White House change, and that relief will give a rally, and then we'll say, ooh, but wait, what about this question? What about that question? When will this happen? Will that happen? So you'll get a relief rally, and then you get a pause after the honeymoon. You're like, oh my God, right? Oh my God, we got a Biden in charge, right? And then all these questions start popping up, and you have to figure things out. How are you going to make money? Okay. Now, I don't think Biden's radical enough to really throw out too many wrenches. Like, again, Elizabeth Warren, right, would have been a much bigger exogenous shock, I think, and there would be a lot more hesitation. I don't think we got like that going on, so we just go back to, and we'll figure it out. But there are still questions we need to work on, which would create some uncertainty and therefore sort of limit the amount of rally. If Trump wins, we already know everything, so the relief rally will just go into 2021, and then Trump will do his Trump thing, right? Trump will do his Trump thing, and maybe we go back and do another trade war with China, and then we'll deal with that. But that's a policy impact, not an election impact and all that kind of stuff. So I'd caution for those that are coming in, try to stay as factual as possible. Like, I worry when someone comes in like, won't the election be bad? What, risk off? Like, why? Right? Like, why? Like, why would you think that? Oh, well, I heard that on YouTube. Well, why don't you just look at your charts and tell yourself, well, what happened last time? Right? Okay. All right. So anyways, certainty and uncertainty is where I'm getting. There's that Kiwi drop just like that. Look at the CAD right off that's exactly the price you want to exit. Exit price, exit price, exit price. Amazing, huh? Take a look at the exotics market. Okay. Gone, baby. Because they're likely to go negative on. You have to read their meeting minutes. Go to the Reserve Bank of New Zealand, RBNZ, and download their meeting minutes and find it. Right? That would be the answer. You thought so, but now go find it. Like, prove it. Yeah, okay. Well, there you go. So that's going to be there. How much, by the way, how much does one, let's phrase it. What is your return on investment? Maybe that's not even the right way. How much, no, it would be a percentage. What is your return on investment per year? Your annualized return on investment to hold a USD ZAR trade short? Okay. Let me say it a different way. If you traded USD Rand, South African Rand, if you lent South Africa money on this chart, on this account, per year, interest only, how much do you earn? Still, it's not a good question, right? Should I just answer it? Yes, the swap. We call that a carry. It's not that high. It's not that high because there's other costs associated with it. The value of the rand, for example, so you might earn 900%, but the rand isn't worth very many dollars. So you get, all right, and then you got your carry on the, okay, so Henry's not, right? No. So, if I remember correctly, and I probably do, You earn on a mini lot $1.05 every day. Times 365 days. Okay. So let's just say it's $400. Interest. On a mini lot. What do you think of that? Are you sure that's it, Henry? I thought it was $1.05. If not, I'll have to look into it. Maybe I don't remember correctly. Oh, I know why. I know why. No, I know why. Because of rollover. Wednesday rollover. I see. Yeah, I know why I missed it. Miscalculated that. All right. So no. So you're right. Because of all right. So let's do that then. Calc. No. All right. So yeah, I guess, that's, well, let's clear. I guess it's probably $1.05 divided by 3. No, clear. 1.05 divided by 3. So it's more like 35 cents times 365. That's way different, but let's do that. Yeah, so it's 130% a year. 130% year. If you lend South Africa money, if you lend South Africa US dollars on this account, you will clear 130% a year. Okay. Thank you, Henry. You were right. Okay. It's not bad. Jean-Guy is wrong. What? Oh, 900%? No, well, no, I know what you're thinking, the interest rate and all that kind of stuff. Well, yeah, it has to get converted, remember? That's all. So converted for, I mean, not you earn 9% rand, but what's a rand worth in dollar terms? So that's easy, right? No, but I know what you're saying. Yeah, you're so anyways, very cool, right? So if we go into a trade war, that's risk off, that's risk off, that's risk off. So that's what's going on here. And poor Turkey is just getting clobbered. Okay. And yeah, so yeah, you're all. We're just caught here. That's all. Just caught. So the interesting part of this is it's not falling, but it's not going up either. And this whole thing is still set up bearishly. So you could keep, taking this down on smaller time frames. All right, guys, I've been up a lot. I haven't slept much. I'm a disaster. Oh, I'm a disaster. Oh, my God. I stayed up late. I got up early. I'm a disaster. So I think I'll call it quits. So peace on earth. May the pips be with you. May our profits be above average. Thank you for being part of my team. Thank you for being part of the Forex.Today YouTube community. Thank you for being a part of the Trader's Way clientele. If you're part of my live trading group that meets on Thursdays, our swing trading group, we will meet today at 4 p.m. Okay. Wow, more spamming, huh? Look at this, just crazy spam today. Hey, this person right here makes $1,000 a day doing some simple tricks in Forex, but they spend their day spamming people's webinars. No kidding. Yeah, wow. Nanny, la-di-da-di. Yeah, wow, really, that's cool, man. Simple little tricks to make $1,000 a day, really? Sounds like a poor pitch to me. So anyways, I'll see you guys tomorrow. Peace on earth. May the pips be with you. May our profits be above average. And according to our spammer today, you don't have to work hard. You don't have to put in time or sacrifice. You don't have to learn why or how. You could just learn some simple little tricks and make just shitloads of money easily and quickly. Huh, that totally doesn't make any sense. Doesn't make any sense. So anyways, I guess, what do I do? Block 9090? Goodbye, 9090. All right, so anyways, I'll see you guys tomorrow. Cheers.